Ladies and gentlemen, good day and welcome to Rajoo Engineers Limited Q4 and FY21 earnings conference call. Today we have with us Mrs. Khushbu Doshi, Managing Director, Mr. Utsav Doshi, Managing Director and Joint Managing Director, Mr. Sunil Jain, Executive Director, and Mr. Jayantilal Jalavadia, CFO. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mrs. Khushbu Doshi, Managing Director, Rajoo Engineers Limited. Thank you, and over to you, ma'am.
Good afternoon, everyone. Welcome to Rajoo Engineers Limited earnings conference call for the fourth quarter of the financial year 2021. I would like to begin by expressing my gratitude to all for taking the time out and joining us. On the call with me today, we have Mr. Utsav Doshi, our Joint Managing Director, Mr. Sunil Jain, our Executive Director and President, Mr. Jayantilal Jalavadia, our CFO, and Abhij Ayar, our Investor Relations team. Before we get into the business and financial performance of the last quarter and a year, I would like to share a brief insight about our company. We have came a long way since inception and crossed several milestones over the recent past. Today, we are among the leading plastic extrusion machinery manufacturers in India, with 35 years of excellence in extrusion in the industry. Based in Rajkot, Rajoo Engineers Limited made a modest beginning in 1986 and has emerged as an undisputable global player in a blown film, sheet extrusion line, thermoformers, and extrusion coating and lamination lines. Owing to our focused efforts, the company enjoys a premium market position in this segment. In line with our strategy, we continue to expand our global footprint with focus on market penetration and sustained investment in research and development to grow further. We continuously strive to identify new avenues of growth and effective utilization of our existing resources. Being a technology-driven company, product innovation, world-class quality, state-of-the-art workmanship, energy efficient, and high level of sophistication and automation have become the hallmark of Rajoo products during all this year, thereby positioning our product on a global platform, competing with established world leaders. With representation in many countries across the world and customers over 70 countries, our exports have multiplied since debuting in the international market in 1990. Recently, we unveiled extrusion coating and lamination machine as a post-extrusion process to substitute conventional adhesive lamination process for producing laminates for various packaging applications. Our brand reliability and position in the global market is future fortified through a number of strong alliances in the industry, such as Kohli Industries from India, Meef Machines from Netherlands, and Bausano and Sigli from Italy. It is an industry practice to build machines with the client's specifications to garner competitive advantage. However, at Rajoo, we have always been pioneer of change and innovation by identifying just the right technology and its mix. To add value to clients' business, we are being appreciated by stalwarts in the business of offering appropriate technologies consistently to help customers' business rather than following the traditional approach. This reinforces our motto of excellence in extrusion. I would like to go through some recent events in the company and as the industry by large. As we all are aware, the past financial year brought significant headwinds for all the industries in the form of the COVID-19 pandemic. Even now, the impact of the second wave is rampant across the sector, hampering logistics, supply chains, as well as consumer sentiments. However, company has sustained through such times. During the first wave of lockdown, company immediately adopted the work from home policy for the senior management team and the sales team from very next day, and followed by other white collar employees. Having years of experience in automation and adoption of Industry 4.0, we could start installation and commissioning of our giant machines through remote support and also continued the post-sale support. We came up with the strong strategies for an international market, new product development, and standardization of existing products, which helped us to smooth navigation during such an uncertain time. At Raju, we believe that every adversity provides an opportunity to grow and succeed. In an effort to help our nation and make the best use of available technology know-how, need of an hour machine were developed to produce N95 masks in India, an import substitution product much needed during the pandemic. With strong vision, backed by passion for research and development, and commendable teamwork, we introduced two products during the pandemic: melt-blown fabric making machine and N95 mask making machine. This helped us to navigate through the tough economic conditions prevailing then. Good order booking of blown film lines, not only from the domestic market, but also from the export market, resulted in a win-win situation for all our stakeholders. Now coming to our financial performance, in quarter ended 31st March 2021, our company achieved net revenue of 56 crore, growing 117% year-on-year. The EBITDA stood at 6.04 crore as against last year of 1.35 crore. In the previous corresponding period, increasing almost 347 year-on-year. Though raw material expenses grew due to heavy uncertainty and price rise in a global supply chain system, we were able to improve EBITDA margin through internal efficiency and rise in the revenue. The net profit for the quarter is rupees 3.91 crore as compared to 19 lakhs last in the same time of year. Our EPS for the quarter was 0.55. Now turning to the full year FY21, if we talk about the financial results, in the year ended 31st March, your company achieved net revenue of 152 crore, representing an increase of 63% year-on-year. This is preliminarily driven by a strong demand for packaged foods over the past year, which offset the impact of nationwide lockdown during the initial months of the period. The paradigm shift in consumption trend can be attributed to the pandemic. Demand drastically changed in the food business as the pandemic shut down all the restaurants and food services outlets. Consumers moved to heavy grocery purchase, due to which packaging demand increased. Demand rose sharply for not only packaging of groceries, but also for the healthcare products, e-commerce, transportation. This resulted into the higher production and sales volume of flexible packaging film, followed by heavy expansion by existing players, adding new production capacities. Continuous orders from the market gave us healthy order book, which has improved the cash flow. The EBITDA stood at rupees 18.74 crore as against 7.32 crore in the previous corresponding period. The deadly COVID-19 pandemic has impacted the global economy, and our company is no exception. Unavailability of manpower, implementing stringent COVID protocols to run our operation, and high cost of production has resulted in increase in fixed cost. Despite this, we were able to achieve improved EBITDA margin on the back of increased demand in the packaging industry. 2020 has been a very challenging year, and the company has been facing truly an unprecedented situation. COVID-19 has impacted each of us personally and professionally. Metal price has been firming up since August 20, with price increase of almost 45% in alloy steel and casting, while copper and non-ferrous metal prices have increased by 42%. USD, Euro, and Yen has appreciated by 8 to 10%, affecting the procurement of automation, electronics, and other critical important components. Uncertainty and hold on a global supply chain has resulted in increase of transportation costs by 15% and nearly doubling for certain destinations. Despite such headwinds, the company has improved the profit margin. The net profit for this year comes to 10 crore, approximately 11 crore as compared to 1.5 crore in last year. Our EPS stands for this year is 1.69, and so far with the gold crest, we have done pretty okay and starting to do better in the future. With this note, I would like to thank once again to all of you for having the patient hearing, and I would like to take this opportunity for if any other further questions on the results being shared. Rujita, can we take the questions, please? Our team is
Thank you very much.
Yeah.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of R.K. Ladha from Yash Investments. Please go ahead.
Hello.
Yes, sir.
And congratulations to Team Raju for achieving this stellar result. Hello.
Thank you, sir. Thank you, sir.
Okay. And I want to ask a few questions. Our EBITDA margin has decreased by 300 basis points from quarter 3 to quarter 4.
Right.
Is it due to only price increase in metal?
JP sir, would you like to take this question, please?
Good afternoon. It is because of some machines which were in the third quarter, they shifted in the fourth quarter, and that machine has a zero margin. That's why it affected EBITDA margin.
Okay. And we can consider that going forward our margins will improve?
We expect that, but for the God's grace, if the situation persists like this, then it is challenging for us. But we will try to improve that.
Okay. And I want to ask again second question that is there any severe effect if government go through plastic ban?
Not really. I request Mr. Jain to please take this question. Mr. Jain?
Yeah, good afternoon, everyone. Good, excellent question, which was very well expected. See, the problem is the government has been trying very, very hard to implement it, but the implementation on the ground has been really very challenging, even from the government point of view. But to answer your question, since we continuously innovate and develop, we have been de-risking our portfolio, and we have come up with new machines like the extrusion coating and laminating line, the tarpaulin line, and the extrusion coating line for raffia, which has got nothing to do with the plastic ban. See, we are a machinery manufacturer. We have to continuously innovate and not just be dependent on government policy.
Okay.
So I hope you have answered your question.
Okay. Very good, sir. And my last question, sir. I just can't understand how our products are, what is our use in the white goods industry?
Our products are not really, let's put it differently. Products made out of our machines are not used in the white good industry.
Okay.
That's a different segment of machines altogether.
Yes. No, I have seen in our presentation that our industry which are using our product is shown as white goods industry. That's why I asked this.
White goods, our presence is very small, because getting technically into it, they require very thick sheet lines, and we are more into thin sheet lines.
Okay.
So we are really not very focused. We may have supplied a couple of machines in the past, and that's why you see the picture there. But we are really not concentrating on the white goods segment.
Okay. Means basically our company is focused on plastic extrusion and thin films.
Correct. Thin films and thin sheets.
Okay. Thank you, sir. All the best for the future, and I wish good health and good corporate governance is also very good, and all the best to Team Raju.
Thanks very much, Mr. Ladda.
Thank you.
Thank you. The next one of Rohan Mehta, an individual investor. Please go ahead.
Hello. Good afternoon, everybody, and congratulations on great performance and a great set of numbers this quarter and even the full year.
Thank you, Rohanji.
Ma'am, I just had some questions. As we can see, the revenue has really increased significantly, and it's the impact of that we see has trickled down to the PAT level also, since revenue has increased a lot at a higher rate than most of the expenses. So, what would you say is the main driving factor behind this growth of sales, and how sustainable? I mean, what do you see the trend to be in the next 1 to 2 quarters? Whether it will be of the same speed or less or more?
I think Mr. Jain would love to respond this. Yeah, Mr. Jain.
Thank you. Good afternoon, Rohanji. You see, what had happened was, if you see the last March and April, as soon as the lockdowns were implemented, so people were very worried how they are going to eat and drink. So when the lockdown opened, the pent-up demand really went up very high, and people started preferring packaged commodities. Like you have the e-commerce platforms delivering to your home, the groceries, the food items, and the beverages. So that is the reason why a lot of pent-up demand was opened up, and we had a very successful year, coupled with a lot of support from the export markets. We ventured into many countries which we were there before, but we penetrated really harder. And coming to your next question, how we see the next 2 quarters, looking at the order book right now, I'm sure that question will come up, but before that, I'm just anticipating it. We are currently booked for nearly 5 to 6 months. That's the current order booking.
Okay.
And we are striving hard to keep that level and even go higher. So next 2 quarters are going to be based on the current order book position, and the pending orders looks to be promising.
Okay. So once the impact of this lockdown reduces and things start opening up, do you see any chance of that impacting the demand? And if that happens, like ma'am has already mentioned in the speech that we are diversifying into other end-use machinery as well, like N95. Is that also part of the strategy to look into different end verticals of catering to make different machines, so that our dependence on plastic packaging sort of reduces in the future?
See, we have 2 strategies in place. One is definitely trying to get away from food packaging, and as I mentioned, to getting into machines for making tarpaulin, and also catering to manufacturers of woven sacks, that is raffia, an industry which has done very well. So that's a new product line which is being added. And the second strategy is to concentrate more on exports. If you see from a global point of view, we are still a very small company, and India as such has got a very small contribution to exports. So exports is a market segment which we see growing very fast. So we are already de-risking our growth based on these strategies. Does that answer your question?
Yes, absolutely. Sir, don't mind, just a couple of more questions. So in terms of exports, do we have any particular region that is accounts for a lot of demand, or do we have a focus on a particular country or set of countries somewhere, or is it evenly spread out?
See, currently we have sold machines in nearly 70 countries, And the mainstay still comes from Africa, like you have Nigeria, Ghana, the West Africa. And last 2 years we've been very successful as a strategy again to penetrate into Southeast Asia. We have supplied a lot of machines to Vietnam, to Malaysia, to Thailand. And now we are looking at even getting into tougher territories like Europe and the US. So world is very big, the market is still very big, and we are still scratching the surface.
Right. And I believe once the restrictions ease out everywhere, things should also improve.
Sure, definitely. And what we have also learned during this period, as Khushbu also mentioned, in capital equipment, installation and commissioning and support after sales is very, very critical. And we have geared up ourselves, and we are installing machines to remote support and even servicing our customers.
Okay. So just one more thing. Looking at the P&L, I believe raw material cost has been probably the only sort of pain point for us, because that's what has caused dip in the gross profit margin. Everything else has improved. So is it going to, how long do you see this impact to go on? Is it mainly because of pricing issues, or is it the logistics that have increased the raw material prices?
Yeah,
Khushbu, would you like to take that question?
No, I think, okay, you take it, Chris. Please.
Okay, see, there's been a lot of volatility in all the commodities, and that is what affected it, coupled with the supply chain and logistic issues, which are now coming back to, I wouldn't say the same levels, but they will definitely stabilize. So our raw material consumption should come under control in the next couple of months.
Okay. And so who would you say are probably the top customers in terms of sales, or in terms of volume of machines that we sell to?
Sorry, can you repeat that question again?
I was just asking, who would you say are our top few customers, top 1 or 2 customers, in terms of sales and volumes of business that we get?
If you look at the big customers during the last financial year, one has been the famous Constantia Group in the country, which is an Austrian company.
Okay.
Then even there's a very big customer in Turkey.
Okay.
And if you come back to India again, there is a company by the name of Fast Track, which is very big in tarpaulin, making tarpaulin.
Right.
And also
Balaji
company in
Wafers.
Rajkot, Balaji Wafers and Shreja in Rajkot. These are some of the top customers.
Oh. Okay, sir. I just had these questions. I'll rejoin if there are any others. And all the best, and thank you so much.
You're welcome.
Thank you.
Thank you. The next question is from the line of Sriram Raj from Ratnatraya Capital. Please go ahead.
Yeah, thank you for the opportunity, and congrats for good set of numbers. So firstly, my question is on the sustainability of the orders. You mentioned that we have an order book of 5 to 6 months. So I just want to understand, like, how is the company placed, in the next 2 or 3 years, considering, you can throw light on the PLI scheme, how that would benefit us, and also going further, is this the packaging demand? Is it a kind of a one-time thing, or you expect to, sustain whether the momentum will sustain or not?
Khushbu, would you like to take that?
Yeah, yes, I can. Thank you very much for the question. So, good question, because everybody is nowadays talking about the sustainability, be it in a plastic or be it in a life. So, of course, we also have a clarity on a way forward. We see that plastic packaging demand is not going away any day. Of course, when the people are talking about the sustainability, the entire market is finding and trying to establish sustainable solutions with the plastic itself. And we, as a company who is manufacturing such machines, we are equally developing a new solution where the product can be recycled easily. So that is the one way of going ahead and seeing the market, that we soon will be coming out with the equipment which is able to produce the film which is recyclable. So that is something which we are looking at 3 years down the line, and that would be a trend. So, and we firmly believe that plastic as a material will be with us for a longer period of time than we really think. But of course, with a sustainable approach. So this is what we are looking at. And as Mr. Jain mentioned, that the future growth we are targeting now international market, and we have a strategy in place for that. All this time, there are Indian competitors, and we would be competing with the Indian market. But now, after supplying some of the key installation in MNCs like Constantia, we gain and establish our performance in the market. And with this note, we are now really would like to compete with the European players and the German players specifically. So that's where the product positioning in the international market would take place, and that's where we are seeing the growth coming from for the next 3 years. Does this answer your question?
Yeah. So how much would be the non-plastic packaging revenue, if I can so call that?
No, sorry, I didn't. I didn't.
How much would be the non-flexible packaging revenue part?
No, it would remain the flexible. See, nowadays the trend is in a flexible packaging itself. Industry is coming up with new development. So the flexible packaging is not going away. It will remain that, but with a recyclable solution.
No, I just want to understand. You had put several industries in your presentation, so I just want to get a sense of how much would be the non-flexible packaging portion. So I'm basically referring to slide number 22 of your presentation. So you had put flexible packaging, agriculture, infrastructure, and all those things. So
correct. No, we still see that non-packaging product. Revenue from those products would be probably less than the packaging product. So that's how we see. And of course, we have on a slide 22, we have mentioned about the PVC segment as well. So that's where our joint venture company is constantly working on those segments. So that is again will contribute to 25% of the total revenue, and 25% would be non-plastic, and the 50% still would be coming from the packaging segment.
Okay, and on the PLI scheme, do you stand to benefit?
I didn't get the question. Can you come again, please?
No, there has been a PLI scheme for food processing, right? I mean, how do you expect your company?
No, I think that is for the food processing, I believe, and so we have not looked at that. But yeah.
Let me come in there.
Yeah.
You're talking about the productivity-linked incentive scheme by the government.
Yeah.
We are still evaluating it, and I'm not too sure how far a plastic machinery manufacturer would benefit from it. But yes, we are evaluating it.
Okay. And are Chinese a competition for you on the export front?
Fortunately, it is coming down.
Okay.
Because people have realized that they can get better support from Indian companies. Yes, before the pandemic, we were competing with China in certain segments. But when it comes to technology and reliability, like it is happening in many other sectors, people are giving us preference.
So that is what is giving you confidence on the export front. Is there anything else that you would like to add? Because I just want to get a sense of what has changed for the company overall sense. I mean, if you were to believe that Raju is probably at an inflection point, I just want to get a sense of, how what is happening on the macro end that we are expecting we have this confidence.
Okay, so if I can answer, Mr. Jain, can I answer this?
Yeah, yes, please.
So, thank you. So, a good question. What has been changed? Probably nothing has much changed because the company's core competency, strength, and the value system will always remain same even for the future. So the change is probably overall company has change is product positioning, and with the, of course, with the strong R&D and uplifting in the overall quality parameters. So which is enabling us to put our product in the international market and enable us to compete with the European suppliers. So that is, if you talk about the change, one, we have raised our standards, and not on a paper, but of course we have proved in the market regarding our product. So that has been changed. And one more thing which company would like now to adopt a very earlier the approach was giving the total solution. Now we have modified it. Now apart from giving the solution, we are also taking extra care that the solution should be apt for the customer, for the market. So it should be appropriate solution for the market. And with that attitude, we have now adopted a lot many flexibility in our offerings. So, where it's like a shopping mall, you have things on a shelf, you can pick whatever you like. And that kind of a thing with a lot of variety, so the industry now has an option to choose their technology. And so it would remain always not only in the budget, but also whatever the technology is available to produce certain kind of a product, that can be adopted, not more and not less. So these two particular things we have changed so far. If anybody would like from management team to add, they can. Does this answer your question?
Yeah. Thank you so much for that. I just have one quick question. The extrusion, coating, and lamination line that we have launched, the Lamex part, what is the final product over there?
Okay, so extrusion, the final product, you see this Balaji wafer pouches, right?
Okay,
you see this lace wafer pouches. I mean, you see the detergent pouches, you see the oil pouches. So all those flexible packaging things, the extrusion, coating, and lamination would be one of the process. And the one another variant which we have developed for the woven sack industry, raffia industry, that's again a non-packaging application from the same machinery.
Okay, the same machinery caters to the non-packaging part also.
Correct.
Okay. Thank you so much, ma'am. Thank you.
Thank you. The next question is from the line of Neha Jain from Artiga Wealth. Please go ahead.
Good afternoon, ma'am, and congratulations for this good set of numbers.
Thank you, Neha.
Yeah, I have a few questions.
Please.
So, what is the current tax rate of the company?
JT sir, would you like to take this, please?
Sorry, good afternoon.
Good afternoon.
You are asking about the current tax, no? Income tax.
Yeah.
It is 25% plus 12% plus 4% on both. That means 29.12%.
Okay, so that 12% will be?
Tax will be 29.12%.
Okay. And there's a sudden drop in receivable days from 46 in FY20 to 27 days in FY21. Along with this, the working cycle has also improved. So can you please throw some light on the same?
So you are talking about decrease in receivables number of days, no?
Right.
Because receivables are almost the same as was in the last year, 20. But the sales is doubled. It is from 93 crore to 152 crore. So if you calculate in number of days of sales, it will be drastically reduced.
Okay. And is there any capex that is incurred during the year, or are we planning any future capex anytime soon?
Not yet.
And anything that is incurred during this financial year?
Pardon?
So far you can say the last year was no capex, and
Yes.
for this year we are now working on the project for the expansion, and probably the strong capex plan would be put into place by next quarter.
But we have to see the current situation.
Correct. So
unless it doesn't improve, it is very risky to go fast. So we are waiting for the stabilizing this pandemic situation.
Right.
We have partial infrastructure, but we are waiting for this.
So that expansion plan is roughly how long of a plan?
no, the plan would come itself by a quarter. I mean, we will start thinking about having something on the platform by next quarter after seeing the market and the sustainability and the consideration of uncertainty around. So the plan itself would take place after a quarter.
Okay. That's it for now. Thank you so much and all the best.
Thank you.
Okay, thank you.
Thank you. The next question is from the line of Anuja Patel, an individual investor. Please go ahead.
Yeah, hello.
Hello.
First of all, congratulations to the entire team for all the efforts and the great numbers.
Thank you.
So I have a question about those N95 mask making machines which we started making last year during the lockdown phase. So are we still continuing with it? Are we making this machine? How has been the market for this?
Yeah, I would request our Joint Managing Director, Utsav, to take this. Utsav, can you please comment?
Yeah, hi, good afternoon.
Yeah.
Yeah, we made that machine in 95 and we are still making it. There's a good potential market.
Okay. So we've talked a lot about the sustainability and the great numbers. I just wanted to ask you, have you set any targets for the next 2-3 years in terms of revenue and the margins?
Yeah, we aspire to grow by 12 to 15% with and more focusing on bringing the sustainable growth rather than such a spike in the graph. So that is something which we are targeting.
Okay. So we have a lot of alliances with Kohli Industries and Niche and others. So any such other alliances are planned for the future?
Yeah, Utsav, please, can you take this question?
Yeah, we are under evaluation with a couple of companies and we are on a talking term. So very soon, as soon as we finalize, we'll let others know.
Okay. So also, if in the balance sheet there is a land which was purchased in 17-18 for around 3 crores. So are those the capex plans which you spoke about? So is this to country on this said land?
Yeah, so that is the same land which we were earlier talking about. That now we are planning to develop it. So that would be the expansion plan for the year next year.
Okay. And ROC expectations, any light you would like to shed on that?
Well, if we look at the last year ROC and this year, there is a huge difference in number. But whatever is being achieved for this year, we are striving to sustain those final figures for the next year.
Thank you so much, ma'am. Thank you.
Thank you.
Thank you. The next question is from the line of Aniket Redikar from an individual investor. Please go ahead.
Hello.
Yeah.
Yes,
sir.
good afternoon, everyone. Hello.
Good afternoon.
Good afternoon.
Yeah. First of all, congratulations to everyone for the good set of numbers.
Thank you.
So I have a couple of questions. My first question is basically on the financial aspect. There is sudden rise in the raw material expenses to 138% as compared to the last quarter, Q4.
Right.
So what is the reason?
Okay. Utsav, would you like to take this, please?
Okay.
So, I mean, Jyoti sir, you can take it. No worries.
Okay. You are asking about the rise in raw material prices, raw material cost, no? Actually, last year during the year, because of the pandemic position and very drastically rise in the steel price.
Okay.
So, to some extent, the raw material price has increased, and supply. Apart from that, supply chain issued an increase in price of all inputs and freight, impacted in the raw material cost. It was very difficult to get even container by giving higher price even. So it is increased by 3-4% as compared to the last year. But we will keep it under control during this year.
And we see little stability in the overall pricing of raw material as well. But of course, supply chain has been affected heavily. And
in case of
we are
import.
not seeing any good sign as of now. But yeah, it got to be okay in coming quarters. But basically, the price rise of the many price rise in the steel and other metals and unavailability of manpower has also resulted in the price rise of raw material ultimately. So these are the big reasons for
Okay. Got it. So my second question is employee expenses as a percentage of revenue, which is decrease YOY. So have we reduced any contractual labor during this quarter? During this period?
No, if you look at the numbers has gone up, but the percentage as compared to sales has gone down. So the expenses has increased as compared to last year, and there is no much numbers of employees or a manpower cost has been reduced. And in fact, we as a company has adopted an approach of not to get rid of any of the manpower in this trying time, but our approach was to stay together and try to help each other. So there is no reduction in the manpower, but of course manpower cost in terms of percentage has gone down, and in terms of numbers it has gone up by 2 crores.
If you see YOY, it is increased little.
Okay. So is there any cost efficiency initiative which has been taken?
In terms of
in terms of the other expense, we can see the percentage of revenue which has decreased YOY. So have you undertaken any cost efficiency initiative?
Yeah. So what happened during the first wave of lockdown, when there was nothing much to do and there was a lot of uncertainty, we spent much of a time on standardization of our existing products, which resulted, having inventory even less. Apart from that, because of the COVID, there are kind of expenses like open house expenses, exhibition expenses, traveling costs. All these costs literally removed from the P&L for some time. So this whole thing has given us, helped us probably for the reducing our costs.
Okay. Got it. And I just want to know who all are the competitors for our company.
As I mentioned in earlier answer, that basically now we would like to position ourselves in a market where we can compete with the European players. But if you consider the Indian players, then Cabra extrusion technique and Venture machines would be the competitors.
Okay. And my last question, is there any plan to dilute our promoter holding in future?
Not at least for next 3 years for sure.
Okay. Thank you from my side.
Thank you.
Thank you. The next question is from the line of Sandeep, individual investor. Please go ahead.
Hello?
Hello.
Mr. Nagpal, please go ahead with the question.
Yeah. Hi, everyone.
Hi.
Yeah, hello, sir.
Good afternoon.
Congratulations to Team Raju for excellent numbers.
Thank you.
Keep it up. I have a small query. There is a mention of export credit that has not been accounted for. What is the impact on the bottom line of the export credit that has not been accounted for?
Jetty sir, can you comment, please?
I could not understand the question. What?
See, there is in the financials, in the point number 6, one of the points is there's some credit in exports which is not being accounted for, mentioned above.
Credit for export which have not been accounted for.
Yeah. What is the impact on the bottom line?
But export, why export is not accounted for?
You can't ask him. No, Jetty sir, I think you need to understand what he's asking.
No, I did not understand.
Yeah. Is there any credit which is not being accounted for the export?
Yeah, that's what I meant.
Okay. Well, MSME na?
No, sir, I think we need to come back to you on this.
Yes. DTE have not been notified the date, till date the rate. That's why not accounted for.
Sorry, come again, please.
Actually, there is a change in policy, NEIS, and rebate of the state and central taxes and levies. They have that in January 21. As the rates under RODTEP have not been notified till date. The income on the account of benefit under the new scheme has not been recognized for the quarter. So it is difficult to provide for that because rates are not available. And we have declared that in our results also.
Correct. That is why he's asking that how does it impact our bottom line?
Yes. That is the income, and that was to that extent our profitability might be reduced, which will be reflected in the next year.
Sorry,
does this answer your question, sir? Sir, the rates are not being defined, and that is why it is not being accounted. But once it would be accounted, of course, the profitability would reduce, and that effect will come in the next quarter. Does this answer your question, sir?
Okay, that's fine.
Thank you.
Thank you.
Thank you. The next question is from the line of Sanatha Research. Please go ahead.
Yeah, hi. Just wanted to ask about our exports are growing now. So what will the impact on the margins? How much scope of improvement can you see in the margins?
Mr. Jain, would you like to take this, please?
See, exports are always a more profitable business as compared to domestic, no doubt about it. And that is one of the strategic reasons why our concentration towards exports has increased. But to give an absolute figure would not be fair because it varies from machine to machine and from country to country.
Okay. But overall, we can see improvement in the margins.
Yes.
Right. Next question. What was the typical order cycle, and can you give me about your cash conversion cycle also? A little light on that.
Hello? Yeah, so the typical order cycle, a lead time of machine would be 5 to 6 months. Okay. And the payment terms, generally we work with is always 40%, 35 to 40% advance and remaining before the dispatch.
Okay, before the dispatch, I get it.
Yeah. In some of the case, in export order, we do work with LC. So that is how it works.
Okay. And what will the kind of order book which we have and what we are targeting by this year end?
Utsav, would you like to take this question, please?
Yes. We have a good order booking, like we are booked up to another 5 to 6 months, and hope will continue the same way.
Okay. For next 5 to 6 months, we are already booked.
Yeah.
Okay. And with the current gross block and opportunity which we have, what is the maximum revenue we can achieve? The top line which we can achieve by the current setup?
Utsav,
Hello.
yeah, he's talking about the capacity utilization, if you can respond, please.
And
Hello.
Yeah, Utsav.
Sorry, I just missed the question.
yeah, I'm asking about the what is the maximum revenue we can achieve by the current capacities?
Maximum, we can go up to nearly 225 CR top line.
Okay.
With the capacity we have as of now. So we are utilizing nearly 65 to 70% of it.
Okay. And we can go up to 95, 100%?
I believe it is better to utilize up to 80 to 85.
80 to 85, that is the right kind of.
Yeah.
Okay. One last question. How much time it takes us to pass on the prices which are increasing of the metals which we are seeing?
Good question. Mr. Jain would like to take this.
I'm not allowed to ask you a question, but I would say how much time it takes to increase the price.
The prices are increasing every day nowadays.
So the point is that it's not easy to get an increase in price. And in our industry, once you increase the price, people don't ask for a decrease in price.
Right.
Petrol prices keep going up, they never come down.
But since last 1 year, you have not increased the price.
Okay.
Yeah, does this answer your question?
So I was just trying to understand, what is, because prices are increasing very fast now.
Yeah, prices are increasing, and this is the kind of thing which we are also witnessing for the first time, to be very honest with you. Right. So when we talk about the product pricing, of course, there was a time when we were not looking at the product pricing even for a year. And now today we are in a situation where we have to look at the pricing, keep on looking at it every quarter. And to answer your question that, we pass on this thing, but it's a very tough task because in the capital goods, the order cycle is so long. Today, if we are, talking about the product, probably order will be concluded after 6 months, 8 months, or a year down the line. So that's how now we have, started keeping even the cushioning for us, that which will really help us. Even if the prices get horrible in the future, we should have some kind of a war chest or a cushioning in that. So that is how we are considering it. So every quarter we try to see the pricing and give that change and try to implement it. But it's very difficult in a capital goods to implement it with ease. So that is the fact. Yeah.
Okay. Just allow me one last question more. How you see about the cash flow from operations level this year?
Cash flow. You are asking about the cash flow?
Yeah.
Because our policy is just to take orders on advance, 30% advance and remaining on before dispatch. And the order position is very healthy this year. So we don't have any problem in maintaining cash flow. We have sufficient surplus to service our suppliers and all the expenses.
But I'm just trying to understand the cash flow from operations. What kind of numbers we are looking?
Numbers?
Cash flow from operations which we can achieve.
Cash flow.
The last year, what was the cash flow from operations?
In terms of cash flow, that is profitability, that is the cash flow. We have not increased any supplier receivables.
No. Sir, we are not able to understand the question. If you can little elaborate, probably we would be able to respond properly.
I was asking what was the cash flow from operations, which we are adjusting for working capital.
Working capital cash flow from operations.
Savli, can you help us, please, Savli, with that?
If I may come in,
Please.
if you would have noticed, our overall finance cost has gone down dramatically. Which means the cash flow has improved drastically, and as Mr. Jalavadia mentioned, it's primarily due to good order booking with advances coming in, and then our operations really striving their best to deliver the machines in time so that the payment is realized very quickly, because we don't sell on credit at all.
At present, we are not utilizing any bank facility, bank finance also.
Okay.
Does that answer your question?
I think, I understood your question. Basically, what we consider as a cash flow exactly is whatever the net profit you are getting and the depreciations. So that is how we see as a exact cash flow in the company.
Okay. The profit, entire profit is plowed back in the company.
So I got it. So it is like whatever the net profit plus depreciation. It must be around 13-14 crores if I'm not wrong.
Correct.
Okay. Yeah.
So you can see that the reserves are increased by that amount.
Fine. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, as this was the last question for today, I would now like to hand the conference over to Mrs. Khushbu Sundarkant Doshi for closing comments.
So I would like to take this opportunity to thank each member of Rajoo Engineers family, and I would like to thank our clients, creditors, banks, financial institutes, and other stakeholders. For any further queries or information, please get in touch with our investor team, Bridge IR. And thank you for the opportunity.
Thank you. On behalf of Rajoo Engineers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.